Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio, as always, is Amit Ranjan. And it's a Thursday morning, and the markets, they continue to reel under selling pressure. I mean, the hit, although, is nowhere as sharp as it was yesterday, but the sentiment overall is, looking rather sluggish. But it's not just us. The global markets, they are also in the red. Amit, fill us in.
The West, especially the US, is waiting for the PPI data that will be out today, Thursday, US time. But like you said, the markets have slipped in the West as well. Tesla, Nvidia and Apple all three were in the red. S&P closed in the negative at minus 0.19%. Nasdaq closed in the negative at minus 0.54%. Only Dow Jones was slightly in the positive at 0.1%. The Stoxx 600 was in the positive, slightly though, at 0.16%. Hang Seng, after being in the green for a week continuously, is in the red this morning at minus 0.68%. Nikkei also is slightly in the red at minus 1%. So all eyes on what the PPI data is going to suggest.
All right, and of course, the markets, they opened in red in India, but we are seeing a bit of a pullback this morning. Nifty, as we speak, is trying to stage a recovery, move back towards that 22,000 mark. In fact, it's very close to that. The mid caps and the small caps, I mean, the real story, of course, is playing out in the broader markets. I mean, it was a carnage yesterday. It looked like it was going to be a carnage this morning as well. But both like indices, they opened 0.5% down, but they are seeing a sharp pullback. Since then, both indices are up 0.5% now, moving. I think the small cap index is actually closer to 1% higher after that initial sell-off. But this kind of a pullback, it could be a technical one, and I mean there is clearly some indicators out there. The RSI, after that sharp fall that began since the start of March, RSI, which is relative strength index on both indices, has hit oversold zone. The small cap, for small cap, it's somewhere around the 25, 26 levels. For the mid cap, it's around the 36, 37 sort of zones. But one needs to be suspicious of this pullback. It could be a dead cat one after all, and I'll lay out a few reasons why I think that. Because first, of course, is that this is the first proper correction in the broader market, especially in the small caps, since that almost unilateral sort of a rally that we saw play out almost in the last past 12-15 months. Now, along the way, along this rally, we had seen pullbacks. In fact, if you look at since the last 6 months, at least since September of 2023, there would be a 3 to 4% correction in the small caps and the mid caps every month. I think November was the only month where we didn't see that trend playing out. But since September till even February, the market would give up about 3 to 4%, the small cap and the mid cap indices. But the recovery, that would be almost immediate and equally strong, and the markets would go higher from there on. But this time, the situation looks rather different. The correction, first of all, is sticky. It's not just a 2 or 3 day sort of a price action that's playing out. It has persisted in the past couple of weeks. The small cap index has corrected almost, I think, to the tune of about 14-15% from the peak. The mid cap index, the correction is much smaller over there, but it still has fallen about 7%. For context, the Nifty has only seen a cut of about 2% from its peak. But the broader market, especially the small caps, because remember, the mid cap universe, there are just 150 stocks out there, and there has been a lot of institutional participation in some of these mid cap names, and they have also seen re-ratings. So I think the situation, or the froth rather, that even SEBI chief Madhvi Puribuch also highlighted, I think that is not as concerning as it's in the case of the small cap indices, because the universe, first of all, it's large, it's huge. 95% of the Indian markets are small caps, and if you look at even yesterday, we saw the worst crash in the small cap index in the last couple of years. In fact, a 5% plus sort of a fall, and the advanced decline ratio. I was looking at some of the statistics. Of the 100 stocks in the Nifty small cap universe, 98 of them ended in the red. and even in the mid cap, I mean 99 stocks ended in the red over there as well. So the advanced decline ratio, it's heavily in the favor of the bears here, and I mean any sort of a pullback, of course it could be a technical one, and we could the option traders out there could be after that almost unilateral sort of a correction, they could be repositioning themselves. But there are multiple reasons for the market to still remain in that at least consolidation phase or a bearish phase for the next few sessions as well, because remember the advance tax deadline is on March 15th. So there is of course some tax harvesting that also goes on around this time period, and that could keep the markets in the negative for the next few months. Of course, we also have the stress test reports that come out for the mid cap and the small cap focused funds, as was mandated by AMFI, and then we also have the electoral bond details. I don't know how big of a factor that would be for the markets going forward, but yes, one needs to be cautious of that. All of it is just going to happen tomorrow, which is March 15, advanced tax deadline, your MF stress test result, as well as your electoral bond details. All of it would come out on March 15th, and today of course is the weekly expiry for Nifty, so expect some volatility to be there going forward as well in this session. But as of now, the markets, they have in fact made a recovery. Nifty is actually up almost actually it's flat, but it's trading with a positive bias of 0.03%, back above the 22,000 mark. The Sensex is still trading with a cut of 0.04%. The mid cap and the small cap space, I mean both indices opened with half a percent cut, but now they have recovered, and the mid cap index is up 0.3%. The small cap index is up 0.5%. But India VIX, I think one needs to be cautious of over there as well. India VIX, remember, we were back in that 13 sort of territory after that, spending a lot of time in that 15-16 sort of a zone. But volatility is picking up once again. It was up 6-7% yesterday. This morning, slightly trading with a cut, but still over that 14.4 zone. Historically speaking, this is elevated, but I mean, if you look at the short term and how much volatility has been in the markets, India VIX is still relatively, it's still at a comfortable zone for the traders out there. But let's also look at some of the sectors, because Nifty Bank, remember, I think that was the only index, because everything crashed apart from the FMCG pack, everything crashed yesterday. Nifty Bank was trying to hold the fortress, but it also became a victim to collateral damage, as was in the case for your large cap stocks. But Nifty Bank this morning is also trading with under some bit of a pressure. It's down 0.65%, showing some signs of recovery. But I mean, the big banks yesterday, SDFC Bank, ICICI Bank, Kotak Mahindra Bank, that were trying to hold the fortress, they are still trying to play that part, although ICICI Bank is still seeing some bit of a pressure this morning. SDFC Bank too, it's trading in line with the cut in the Nifty Bank index. And let's also talk about IT pack, because we were seeing some buying interest after that inflation report that came out both in India and US. That came, inflation for the month of February was benign in both countries, and that works out well for the Federal Reserve in the US and for RBI over here to go ahead with the rate cuts, because the inflation situation was a major concern for both the central banks, and that's coming off nicely. But I don't think anyone is expecting at this point a rate cut from the Fed, at least in this month's policy meet. But May and June, the optimists out there, they are banking on the first cut to come in May and June. But then I was reading some of these reports, which suggested that even if there is a rate cut, there could not, maybe the Fed only goes for just a standalone rate cut instead of a series of rate cuts. So be cautious of that. But we were just looking at the advanced decline ratio, and let's spend some time over there, because the overall breadth of the market, look at it. On March 11th, the advanced decline ratio was 1:4, meaning 1 stock rose for every four that fell. On March 12, still relatively, in the bearish territory, of course, 1 for 6, but March 13, 1 for 22. I mean, that's pretty, I mean, we have not seen that sort of a stronghold from one section of the market in a very long time. So that perhaps makes a case that, this correction, it's just not going to last for a session or two. It's here to stay, and one needs to be cautious of that. So what should you do? Perhaps, reading from what a lot of these experts have to say, I guess it's time to, because the market has already corrected, and even though the both indices have given up somewhere 7 to 15%, the portfolios, they are down somewhere in the range of 16 to 20%. So maybe it does not make sense to book profits now, because one could, at least looking at this session this morning, again, it could be a dead cat sort of a bounce, but it could be a bounce and it could be a pullback from here on. So one needs to be cautious out there, especially in the small cap and the mid cap space. Maybe, according to me at least, wait for the dust to settle, and keep certain allocations, certain cash ready for that small and mid cap stocks, especially the mid cap stocks, which are getting back to those attractive territory. But joining us on the show now to share his views on the market is Santosh Meena, Head of Research at Swastika Investmart. Thank you for joining us here on News9, Santosh. Good to see you after a long time. And the markets, I mean, we opened with a marginal cut. Nifty tested 21,900, but we are back in the green, trading on a flattish but with a positive bias, back above 22,000. But I am concerned about this advanced decline ratio. I mean, that's clearly, it seems that the ball is clearly in the court of the bears. So is this sort of a pullback, or at least this pullback that the market is trying to post this in this session, which also is a FNO expiry session? Do you think it could be a dead cat one?
Yes. Well, good morning, everyone. So yes, advanced decline ratio yesterday was worst ever. I think this kind of advanced decline ratio we saw in COVID and at the time of 2008 Lehman crisis. The kind of the market yesterday. But yes, I believe we are near the temporary bottom, because historically, technically, if I talk about the Nifty small cap, mid cap index, so in September, October, we saw a fall of around 10%, and in that fall, Nifty small mid cap index took support at 100-day moving average. Similarly, at this time, it has completed, Nifty mid cap index has completed 10% correction and took support at 100-day moving average, and now we are seeing a bounce back. So I believe we have made a temporary bottom, and historically, first half of March remained volatile, and even we saw pressure. And after 15th of March, we see some kind of relief rally in the market. Maybe this is because of the advanced text number. But yes, panic bottom has been made yesterday, and today's low has been made. Nifty is at exactly 50-day moving average, and Bank Nifty is also around near to 50-day moving average. So I'm expecting a temporary bottom in the market. Yes, we have to look for a confirmation that the correction has been ended and market is ready to move higher. But yes, for the time being, I believe it is good time to look for quality mid cap and small cap stocks, and stay with majority of your portfolio should be in large cap, but you can also select few quality mid cap and small cap stocks from current level.
All right, focus on large caps, but look for pockets of opportunities out there, especially in the mid cap space. Small caps, be slightly wary. But Santosh, stay with us as we'll slip into a break, and we'll be back in just a short time from now.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
There's a new video around what deepfake can do.
We had seen a trailer of this a few days back.
Owners should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9 and the markets. They are back in the green. Nifty has reclaimed 22,000. It's moving higher, very close to the day's high. Currently sits at around 22,028 mark, up 0.14%, and this is as of 10 a.m. this morning. Sensex is also up 0.13% at 72,856. The mid caps and the small caps, they have seen a tremendous bounce back. Both indices opened with a cut of 0.5%. Currently, mid-cap index is up 0.5%, whereas the small-cap index is up 1.3%, very close to the day's high. And volatility, that's also falling because India VIX, actually it's up about 1.7% at 14.19 levels. But Nifty Bank, Santosh, coming back to you. Tried to hold the fort yesterday, but ultimately fell victim to this broader market crash. But could not hold above 47,000. But we are seeing a good bit of recovery play out this morning. Almost the index has recovered from the day's low, is back above 46,800. Is 47,000 where you are a bit iffy about this reversal? Of how are you positioned on Bank Nifty?
Yes, Bank Nifty did relatively well yesterday because of the weekly option expiry. Tried to hold 47,000 mark and 20-day moving average, but in the morning it slipped below 20-day moving average. But today's low is exactly at 50-day moving average. I'm expecting once it will cross 20-day moving average around 47,000 mark, we can expect a short covering move. Maybe tomorrow we can expect a short covering move in the in Bank Nifty. So risk reward is favorable in Bank Nifty. I believe there is an unfinished business of hitting all-time high in Bank Nifty. So if today's low it managed to hold today's low, I'm expecting in coming days it is likely to outperform.
Right, and there is one particular bank I wanted to pick your brains on, is Kotak Mahindra. Apart from SGFC, it's the only other bank in this cohort of large private banks that has not done much over the past 3-4 years. On a 5-year basis, it's up just about 30%, and on a 1-year basis, flattish, up 3-4% or so. But yesterday, managed to end higher in a falling market, and I think you would appreciate it, your technical analysis, a bullish Harami formation on the price chart. There was a crossover for RSI as well. I mean, is this a stock to consider in your opinion at a time when everything else is deep in the red?
Yeah, if you look at the chart of the Kotak Bank, so since the beginning of 2021, it is in the range of 2000 to 1650. So it is currently trading near its lower end of the range. So I'm expecting a bounce back, and technically there is a kind of pattern, inverse head and shoulder. It is forming, not yet completed, but I'm expecting this formation will be completed and it is likely to do well. So risk reward is very favorable in this counter. I think 1700 should act as a strong support now. It should not fall below 1700 mark. On the upside, 1780 to 1800 will be the first resistance area. 1800 is its 200-day moving average. Once it will cross 1800 mark, I'm expecting a move towards 1950 level. So risk reward is very favorable. It will still remain sideways. The broader range is 1600 to 2000. But yes, it is near lower end of the range. So I'm expecting a bounce back from here.
Okay, Santosh, there is one lone ranger yesterday in the mid-cap 100, and that is Murugappa group firm CG Power and Industrial Solutions. Of all the 100, that was the only company that was in the positive, slightly though at 0.83%, and today too it is in the positive. Is it the confidence that they have laid their first foundation stone for their 7,000 crore semicon project in Sanand, Gujarat, or there is something else? What explains this? Out of 100, just one lone ranger?
Yes, definitely. I think on the day of the news, the stock witnessed gap up opening and it managed to hold that level. So after filling that gap around 450 level, it is taking support at 450, which is a cluster of 50-day and 20-day moving average. So it is showing strong resilience around that level. So I'm expecting this 450 level should act as a strong support level, and it is ready to move higher. On the upside, this 490 to 500 area is a critical resistance zone, but I think it will cross this resistance and it may probably move higher. So the chart structure is very bullish. 450 is a stop loss, which is very near at current level, and upside is open towards 550 kind of level.
Santosh, another company in the same space or going into the same space is Vedanta. Now, SEBI has asked them to pay up 77.62 crores to Scottish explorer firm Keynes, and if they don't pay up in 45 days, there will be further action. Their stock in the last 5 days has slumped almost 10%. Good time to buy, or do you see this trend continuing for some time?
Okay, if I talk about the Vedanta, the counter is generally in sideways trend. On the downside, 250 is acting as a support. On the upside, 280 to 290 area is acting as a resistance zone. Currently it is trading near lower end of the range, and 255 is its 200-day moving average. So from current level, we expect a bounce back toward 270 or 280 kind of level. So for a trading perspective, you can buy, but for long-term perspective or medium-term perspective, better to look other metal stocks which are doing relatively well. This may remain a trader's counter, but for investment, you can look a better option.
All right, and Santosh, at a time like this when the markets are in a free fall, I mean, what is your advice to traders out there? Should they just, wait on the sidelines, let the dust settle, or is there opportunity in the markets, in a falling market especially?
Yes, I believe last 2 days, especially yesterday's fall, is giving a good buying opportunity in many counters. So I'm expecting a temporary bottom in the market, and market should rally from current level. At least we can expect a dead cat bounce or a rally of 10 to 15% in some small cap or mid cap stocks. So my first pick will be from chemical space. For last many days, chemical stocks are not performing. There are some signs that they can outperform from here. So first stock is SRF. 2500 will be my first target. 230 will be a stop loss. I also believing that metal stocks should also do from here. There are some signs of revival from China, and metal doing well. So technically as well, Tata Steel is bouncing back from its 20-day moving average. So 150 should be a target, 138 should be a stop loss. Another from Tata Group, Tata Consumer, another strong counter, 1260 should be a target. 1130 should be a stop loss. As discussed, Kotak Bank, I am bullish on Kotak Bank. You can buy at current level. 1800 should be your target. 1690 should be your stop loss. And last, from the mid cap IT space, the Sonata Software. It is after a descent correction, it is giving a good buying opportunity. Buy with a stop loss of 690. 820 should be your target.
All right, those are the top stock picks for the short term. Remember, the markets are falling, so be cautious. But if you are to go for a short term trade, maybe these are the stocks that you can consider. That's the word coming from Santosh Meena. Sir, thank you for joining us here on News9. Always a pleasure speaking with you.
Thank you.
But oftentimes when the markets are trying to fall, I mean, there's an old adage in the market falls first, and the flow of reasons follow soon after. And certainly the focus should of course be trying to find that culprit, and I think the market is holding on to the mid caps and the small caps. They are holding them liable for this market correction, and for the right reasons of course. There is where the pain has been felt the most, but there are the stories playing out in the market. Amit, you are tracking one. You were talking to us about this, in the newsroom. Fill us in, please.
One sector that has been on the upside today, apart from metals and media, is pharma. But pharma over the last 5 days has been in the negative across the board. Not a single company has been in the positive. The graphics will show. Now the government has formed a committee to have a new pricing reform policy with respect to pharmaceutical drugs and medical devices. Now the DPCO, the Drug Price Control Order, which is currently prevalent, is 11 years old. So the new one is in the offing, and that is primarily aimed at boosting exports, giving a fillip to the industry, and APIs of course, which we are trying to attract even with the help of PLIs, and the availability of essential medicines at a affordable cost. Those are the aims. But looking at, probably this will give a turnaround to the stocks that in the pharma space. Over the year they have done well, but in the last 5 days, despite this order, despite this news, they have been floundering. Probably the market, the whole market has been going down, so probably along with that. But this is the last 1 week that these stocks are all across the board in the negative. We are looking for good news at this time, or probably it is time to buy in.
All right, pharma stocks, I mean, clearly there is a story playing out there, because first of all, remember, there are a lot of segments in this space. There is your hospitals business, your healthcare business, your devices and all. APIs. So there are several sort of businesses that are, in this one particular umbrella, one particular industry. But the pharma story, I mean, even in this fall, the hit hasn't been as hard. In fact, even this morning, when the markets opened in the red, and all sectors were unilaterally in a correction zone, pharma was the only sector that was trading slightly higher and continues to do well this morning. So perhaps keep an eye out for pharma stocks in the near future. But with that, let's also look at the markets, because the recovery was there. Of course, Nifty has reclaimed 22,000, but we are kind of holding to those levels, which is also good to see. Remember, today is the FNO expiry for Nifty, so volatility could remain a concern. But India VIX, that has declined on an intraday basis. We were at 14.4 on India VIX. Currently, we are at 14.11. So that's good to see. The small cap and the mid cap indices, they continue to move higher. Mid cap index is in fact almost up 0.7%, very close to its day's high, above 46,300 as we speak. The small cap index also, again, the strongest segment of the market this morning, but has been the weakest segment of the market as well over the past couple of weeks, has declined by about 13-14%, but this morning up 1.73%, as you can see on your screen. Is moving towards 14,500 zones. But again, be cautious of this pullback, because it could be a technical one. Of course, the RSI, if you look at the small cap space, was in the oversold zone. Up till yesterday, it was in that 26-27 sort of levels on RSI. So it could be a technical sort of a pullback. So there needs to be concern out there. I mean, yesterday we'll have the mutual fund stress test results. which will come out. So perhaps that will give us some cues that, you know, how correction proof really is your portfolio, especially with regards to the broader segments of the market, the mid caps and the small caps particularly again. So maybe wait for that, because remember, some of these small cap stocks, they are not as liquid as you know, the other pockets of the market. So to get out, maybe, you know, the spreads will get too large, and even if you think that the price is you know, trading at X amount of level, before you actually are able to exit these stocks, because of this low liquidity, low float in the system, you might end up selling at a very, you know, considerably lower price to what's the current market rate is. So be cautious of that. Make sure you're aware of you know, certain risks that are existing in the markets. SEBI has flagged that. They you know, wrote about it a couple of weeks back, and it's the excess froth that's you know, coming off the markets. But still, you know, when the markets are falling, also you need to consider that a lot of these stocks that, you know, maybe you were sitting on the sidelines for, waiting for the right time to enter into those. So maybe you make a list of those stocks, keep some of that liquidity, and in this correction deploy your money in companies that you are confident about, the companies that have delivered you know, good earnings. Because you know, we talk about this debate, this two schools of thought in the market, the growth and the value philosophy. But remember, wherever there is value, there will be growth. I mean, the growth will only you know, come if there is value in prices. Market will make sure you get there, maybe not in the short term, but that's the game for the long haul. But with that, let's end this bulletin, and thank you for watching.